What's that going to do to the stock market if, in fact, the Supreme Court upholds the lower court rulings and invalidates the president's use of tariffs in this particular way under this emergency power?
Well, initially the president comes out and says something that makes us feel like you got to sell stocks. And then a few weeks later, you say, well, or days later, you say, well, why did I do that? We're now in an era where half the companies on my desk no longer have to cut numbers.
Yeah, we saw some intraday charts of equal.
Hello, good morning. Good morning. Welcome to another ES Futures trading stream. Remember, I do this for journaling purposes only. This is not intended to be an advice for trading. Trading is a risky business. It's a business to begin with. It's a risky business. You can lose a lot of money. You can lose all your capital here as well if you don't assess risk properly. All right. From yesterday, one of the things that I was watching yesterday during the day, or as the day developed, right, was after witnessing this market failing to close this gap, right, and re-entering in previous day range, was probably, one of the things that got watched here was watching this distribution being closed, right? Notice, and having the opposite side of the range as a potential destination of the trade. Not of the trade, but of the movement. The day was a terrible day. It was a really bad paced day. We have advanced, and it looked, as we can see here, it looked above previous day range. But from the previous day, something really interesting that we were talking also is about how this day, after a while, really, after a long time, it has a really nice tail, a selling tail up here, which is completely different to what was happening before. Most of these retracements had actually buying tails, right? And the fact that actually close below this, or close back inside this range here, basically, all right, close back inside this range. That is the thing. And following that, yesterday, after the movement we were also watching. Remember how I monitor volume. The volume coming during the selling, during the liquidation periods, is still coming stronger or higher, significantly higher than the periods in which the market is going high. Now, coming into today, before the close, another important thing is I was watching really, and I sound like a broken disc now, right? It is how relevant is for the market, or how relevant can be for the market. Hold on. How relevant can be for the market to close above this range, right? Close above this range up here, right? And it had the chance to do it because it has left a significant amount of highs up here, meaning that there's a lot of stops here, right? And not just close back inside, but it closed deep back inside. Now, that I got from the, everybody can see that on the dailies. But if I zoom in a little bit and start checking the profiles, right? The pullback, which I have marked here, I have marked here. I'm going to keep this profile open as the day opens here, is how it just ended, right? Ended right at half back here. This is not relevant. This is not relevant anymore, right? It closed way deep, exactly at half, at the center of the previous of the day, which, okay, is an indication that there can be some downside here, right? I am not saying that it's going to have downside, but the potential is there. Based on what I just have said, right? Now, looking into today, I can see this is it has a very prominent overlap POC. Let me expand this profile, right? Inventory is fairly balanced, right? I want to check now where this market opens, right? As I checked yesterday where it closes, I want my short-term focus, my immediate focus is where it opens relative to this pullback that we have here. We have a trending day that ended rebalancing. It is short. It has a short covering day. This has a short covering shape, a little bit elongated to the upside actually, which is actually not that bad. It's not that bad for the buying side, but it has some mixed signals here, right? It has a mixed signals here. There was just, I guess, Fed Busby just came out and put a statement out there saying that he might be reluctant to continue the rate cutting cycle. What do that mean, right? And how the market is taking that? That the market has priced one more cut for December, but if more Feds keep coming and start, we had Chairman Powell saying something very similar, right, during the FOMC press conference, and more Feds come out and say the same thing, I guess that will put some pressure on the market. Let's check now. Let's check here. Let's start going from monthly. Let's check the monthly. I haven't done this in a while, right? We got this. We got this market that has an incredible round. Right? Look at where it was, where it is. This is 48.67, the low, and the high 69.52 divided by 48.67. Look at that. Look how much advance this market has had, right? I'm going to put that one here. Duplicate drawing. And just put it up here. No, better up here. Okay. How much is this? 43% from the lows. From this low, this is unbelievable, man. This market is crushing, right? It's beating all expectations here. Relative to the previous year, how much is this? 61.63. 61.63. 12%. 12 point, let's call it 13%. 13% year over year, and from the lows for the the markets don't have this kind of. I guess this is the first time having this advance 13%. Usually the market crashes or is obliterated. It has extraordinarily good years or bad years. It's never, I mean, the average S&P in the last 67 years is 10, 12%, but it never was 10%. It was always higher year over year or was very low, right? Let's call that one. If I have 10%, how much it would be 10% from this high? Where is 10%? I just wanna check these things here. 10%. Where is 10%? 10% would be 69.52 times 90. That's 62.55, 56. Edit properties. Let's make a copy. This is 10%. 10% pullback would be but where do you win? What the heck? Where do you win? Oh, 10% down here. 10% down here. All right, 10% down here. I don't want to be there. What about 5%? $66. That's 5% retracement, which is not bad really, right? So right now would be maybe around 2.5%, which is a nice healthy retracement that this market is having. This high here is for me an important reference for the intraday time frame, which is 67.56, right? And we are calling about some rebalance, some potential rebalancing happening here. This market has excess in the monthly time frame, right? This high, the 67.56, is what I have up here. This is September high. All right, line style. Let's do a dash so it can be differentiated easier. All right, this high here. Now, if I check the weekly time frame, look at this. Look at this time. Look at this thing, man. You can see, I mean, these trend lines are very old trend lines that I have there. And market was, how mechanical was selling from this trend that came from way back here, right? I didn't put it when this happened. It was there way before this. I just extended this trend line, and this one is also an extended one. Okay. Now, this is wrong. This 5% is 66.04. 66.04. Now. All right. Oh, look at that. That 5% retracement falls right on the go no go level that I have here. But before the market can get over here, first it has to deal with this distribution, right? This is the weekly time frame. If there is something serious here, right? As you can see now, we have a distribution here. I'm going to call this as the low. No, I'm going to call this low here as a low, this one. Of this range, right? It's coming here. First, it has to. It is getting back inside this range, but so far it's being rejected. The high of this one is 68.06. Why is 68.06? Lower 5-week range high, right? This 5-week range, this high is right here, right? Right here. I guess it has too many things here. I don't like when a chart has too much crap in here, man. How can I do this to see just? Maybe if I maybe I put a dot there. How it looks? Yeah, that looks better. Okay, I can check this one here, and then I'm going to close. I know this is the pullback low. I'm going to close. Look at this high here. Alright, look at what we have here. Now this is. Oh, come on, man, really? No, select color, we'll put red, okay, apply, okay. All right, right there. Because it is risky here, right? I do this kind of mark, I leave this kind of markers behind, because usually what happens, we have a tendency to forget what was, or what happened the previous day, as soon as we start a new day, right? It always happens. Now in the lower side, let's finish. That's why I'm checking here, right? If this market has acceptance down below this range, will mean this market building value below this area here, okay? And has to deal. And I am checking these trend lines because what I have noticed in this market, in this quarter, is this. Just notice what is happening here. This has happened before. It probably will happen again. Right? You have seen first when this market takes this trend up, breaks through, there's a retest, and this is bought again. Let's see. There probably could be some buying here, or maybe even higher here. I'm not saying that's going to happen, but this is something I always watch. Right? What does this mean? If I have something, for example, that is going lower, meaning a short, if the market comes close here, probably there's a good area, depending on what time of the day is. Probably it's a good area to close, to hedge, or to take profits, or if the market start to retrace and the trade doesn't work, to take losses as well. Now, it has been the case for this market that it has taken several attempts in this market to close the gaps. This gap took 1, 2, 3, 4 tries before it was closed. I don't want to say anything here, but maybe this is something that the market is obsessed to as well, to do it, close this gap. This will be the third attempt if this happens. Notice where the market, we have 5 minutes to open, where the market is in the lower side is going to open As we speak, it seems like it's going to open below the spike, below the spike, and all of this inventory, remember where it started at not half back of the period, half back of the day, and all of this is being dealt with. Yesterday we have short inventory trapped, and now the market is dealing with long inventory here. All right. We have an outside day, or potential upside day that failed to close as an outside day. It is not an outside day. I'm going to close this and check how the markets are doing, how the other markets are doing. Markets overall, we have a nice rally. There has been divergent markets with bonds breaking. While bonds were breaking, the indices were doing the opposite, and now it seems like we can see some short covering here. It looks like long liquidation. What we have here, this seems like could be short covering, and I won't be surprised that now this market goes in the opposite direction. Like a confirmation that we still have a divergence here. Gold, crude oil is. Let's check. This crude is in the downside trend. Yeah, there's some. It's trending lower here. The dollar index is also is a low trend, and now it's forming a range. And there's some rebalancing also that's happening in gold. And look at this huge upside, and this seems like it's going to reach the 50, but not breaking, but rather by time. As time passes by, this 50 will keep going higher, and this range may reach that moving average. And it has been consistently buying from the 50s, as you can see here, for 1, 2, 3, 4, 5 quarters. I don't know how many quarters here. And it could be, it can be the case that some buying comes up here as well. Now, regarding the indices, you have 2 more minutes. It's post ES and Nasdaq are supposed to open inside previous day range below the spike, which can suggest a continuation of this action. Same goes for Russell. And the Russell coming back inside this range. There's 2 distributions, 2 clear distributions in Russell. Same goes for Russell, and the Dow have 2 distributions, and Nasdaq and ES are in sync. I would pay close attention to these charts as well. Depending how it happens, how they develop. Don't forget about that. Now we have less than a minute to the opening. Oh, very important. Down below, I am still checking this area here. Right, support. This is to me support resistance, and one strong case here. Something really strong for a support resistance would be why I put this here. This is not here. This is supposed to be down here. What? Why do it here? Why did it here? I put this for some reason there. The 67. Okay. Alright, let's keep the opening inside previous day range. Open is down here. But market opens inside previous day range. I try to keep myself away from those markets because the opportunities usually are scattered and less than when markets are out of balance. The exception comes, If, for example, as we speak, during this first period, this market gets out of this range, that would be one thing. Because that would be the second time in a row, back to back, for example, that this market looks below or outside of previous day range. In this case, it's not a previous day range, but it is a 2-day range now. All right, it will be looking below, checking below this. I wouldn't be that convinced now that if this market takes this low out during this first period, that the market is going to have something like this afterwards. I would the odds that happening again is for me are not that good if it happens. Right? Now, traders have the tendency to do what they did before, right? There was some buying coming at these levels. What is this? 20. Where is the 20? Happens at the 20 is up here. Where are 20? Yeah, here. There is significant block activity around that level. Right? It is, for me, it is an intraday short term support resistance. Right where the market is up here. Do that mean I'm going to do anything here? No. I mean, that's just an observation. It happens to be what is up here. There's nothing here, really. There's nothing here. I'm going to change this. I guess I'm going to do is, what if we do start? Nah. Square triangle up. No. Diamond. Yeah, that's better. That's halfback. Okay. Diamond. Halfback. Let's change the name. Diamond. Diamond. Okay. Save. Okay. Yeah, I can see. I like that better than this dash line. Let's remove this one. As you can see, I don't have a bias here. I am very neutral. If I have a bias here, would be to not to do anything, right? I will give plenty of time. I'm willing to give plenty of time to the market to do whatever it has to do. All right. Oh, look at this. Look at this. This is very come on. Okay. Let me show you. This market has made a stand here at the 20s again. At the 20s was, what do we have at 20s? I have, oh, that was to the upside, huh? Where is the 20s? Where's my marker? Come on, marker. Marker, where is the 20s? That was during the overnight, so I will put it right there with this here. Okay. I'm going to change this. I want to put 10, red triangle up. Red triangle up. Alright. Save. Oh, come on. Red. What is triangle up? Alright, triangle up. Color red. Okay. Right, vertical on the top. Save. Right triangle up. Okay. Let me see if that's is that noticeable? These markers here. I am still working on this. This is a work in progress. This might change. But what I have here is big blocks. That's 1,000. And that happened during, pay attention that happened during the regular trading hour. I mean, during the pre-market, okay? That happened during the pre-market. It didn't happen during the overnight. That's a 900 block. There are almost 1,000 contracts. We deal with the delta, with the bid and ask. I don't do the diagonal bid and ask. This is the study that I have here on this side. That's why I point this arrow to the upside. Probably some buying happening. Somebody's trying to hold this market in this area, which can lead, right? I mean, when I see these markers, these blocks, some references, potential references that can show a direction, I have to put those ones in context, right? Not just because I had maybe an upside, trying an upside direction. Maybe the direction is to the upside. Doesn't mean I am going to be automatically long in this case. Right? But I see the context, right? What happened yesterday, for example, we have value higher, but they have a pullback here. A significant pullback here with a low that is pretty much held back to the tick, right? Very, very, very questionable, right? Which means that there could be some downside here. And look at where this market is being bought, right? Do you remember what this market is? Right? Do you remember what that was? Let me take this one out. This is taking too much. It can be distracting. Before doing that, just a moment. Let me save this. Okay, save. Save chart book. Let me save it again. Save chart. Save as. Save as. Save. First, save as. Let me save out the backup again. All right, and do this. All right. Do you remember the monthly, weekly charts? Okay. I do have those ones on the side. And this is it. Right? Look at where this market is. Yeah? And this mark here comes from this time frame. Okay? Comes with this one. First, the market, if this market is going to keep coming lower, it has to deal with this reference first. Right? And down below, the 67.50, which is below this. This is support resistance. 61.50 is just like 10 points below this one here. 60 something. 68 is this is what I have here, right? I don't have absolutely no interest in doing anything here right now. We have a very prominent overnight POC. These kind of references have the tendency. I'm going to remove the name. Let me check this name out. It's too distracting there. Even these lines, I don't like that one either. But let's just move it over here. Okay, so there's a bunch of things going on here. We have the 6800, we have this pullback here. We have settled. I don't think too many people is paying attention to this, to what happened, what the market is leading up here. This is a very questionable high here. Non-excess. This is a weak high. This is a poor high. Poor high. I say poor because it has no excess. No. very questionable. Also very questionable high. Why I call it very questionable? Because it has no excess. It is one tick of excess that it has here. And on top of that, it has 1, 2, 3, 4, 5, 6 highs gathered very close to each other. Very close to each other. Now, I haven't spoken about NASDAQ here. What do we have in NASDAQ? Did you hear that? That is some differential in volume here. Every time I have a bid and ask, or ask and bidders about 1,000, I got that thing that pops. We have more volume coming here. Oh boy, what was that? Oh, to the upside? What's to the upside? And oh no. Let's copy this. That was coming down here. All right. But it happens really fast, man. Let me show you what I'm talking about. This is what I have here. This is what happened during the overnight, during the pre-market, which is this big block here. How much? I have there 900 contracts. Now I have another 900 right at where this level is here. This is negative, means that there is buying coming here, because it's a differential between the ask and bid. So if this number is negative, that means that there's some buying that's coming there. As I say, I don't trade basically. Don't make too. Don't try to make a science. Don't try to make trading a science. You know, many new traders. I did the same thing. Right? When I started in this business, I just tried to predict, right? Like to figure out markets with indicators and a lot of crap that we may find out there. Trading is not science. Trading is more like an art. Right? We got to put things in context always. And sometimes it's really, man, this is something I keep listening over and over. It's, you know, the dumbest that you can make it, the simpler that you can make it, the better it's going to be. It is very counterintuitive, very if you hear me out, if you are listening to me, I am constantly seem to contradict myself. And if you check, for example, there is some people up there, there's a lot of people actually, that I consider good traders, that have put themselves out, either through chat groups, either to YouTube or Telegram or things. No? One constant on a certain kind of people that follows blindly, right, without thinking, is the complaint that they have towards towards whoever is hosting, but towards the host, right, is that they say, right, you are contradicting yourself all the time. You say this, now you say that. You say this other thing that is quite the opposite that you just said before. Right? That's classic. That's a classic complaint, and it just shows, right, that whoever is talking that way doesn't really have an appreciation of what markets do, right, and what trading is about. We have to be able to to keep contradicting thoughts in our minds at all times. Notice or check it out where this range, where yesterday range was, you know. Yeah, the same advance we have to the downside is the same that we have to the upside. All right, I'm going to close this. I'm going to close this. Let's see if I can change this one. As you can see, I got a lot of time between hands. I plan to do nothing. Right? This is one thing, right? It took me a long time, right? And I learned the hard way, really the hard way. As very much every single lesson that you learn in trading, it is learned the hard way, right? When we have ranging markets, it's better, right? Just to stay out. Now, what happened? This is what happened. Okay, let me bring back. My daily charts, right? To show what I'm talking about. This is a balance, for example. This is an inside day. This is a 4-day range. 1, 2, 3, 4, 5-day range. Yeah. This is a bigger range. This is a range here. Market goes low here, then retrace it. And opens, go low, retrace it. Right? Goes low, both from the 50s, retrace it. There's a breakout. There can be something here, right? This is the market getting out of balance. This area. Let me do a screenshot of this thing. And this is what I mean when markets are in balance and the rebalancing that happens all the time when inventories get too long or too short. The rebalancing that comes afterwards, that's where, or at least I think, the discretionary trader leaves, depending on the time frame, right? We got a range here. This is a breakout of this range. Okay, breakout. I got something here. If I got a trade and fails, okay, I'm not going to wait until I'm down here to close. This is a breakout failure. Right? Take the losses. It's really easy to talk about that, but gosh, when you because nobody wants to lose, right? Nobody wants to lose. And that's the thing about trading, right? Losing is key in this business because we are going to lose all the time. As long as we can keep these losses low, right? Only one trade that comes up good of this one is going to take these losses out. Right? But to do this, okay, of course it's really easy to talk about that. But to be in the trade and close a losing position, getting to that step, and okay, there's something coming on. Again, it's coming here. I just had this I mean, this is working nice actually. This, what do we have here? Another buying here at 68.05. Copy and move. Oh, they got another one here. Okay. As the market drops, there's something huge that's coming here actually. It's not. Let me show you what it is. It seems like this day is going to be interesting day to watch. Look at it here. This is 900 up here, 900 down here, 1200. All right. The market just, I was watching this, but I just with the side one eye, I just catch this, right? The market counts down quickly, and boom, makes a stops here. And why it stops, right? That tells me that it's buying because they was selling and somebody's, something happened there that's not, I'm not going to say somebody, right? I apologize for that. Something happened that just catch the market, prevent it to move further down quickly. But what that is, right? The fact that it's a buy, or that fact that can be a buy, it doesn't mean the market is going to be going higher. Because something that can happen there is that can be, right? That can be a long position taking losses. It can be somebody positioning there. It can be somebody hedging a position there. I don't know what that is. I really don't know what that is. That's why these indicators are really, I consider sometimes a waste of time. What I'm paying close attention to is, can this market get out of the 2-day range during this period? All right. So again, this is a breakout balance. This is long inventory here. Market gets out of balance. Inventory got short. There's a rebalancing that comes afterwards. And then we have more long inventory coming here. Long inventory coming here. And shorts then get squeezed. The same thing that happened here happens here again. Can you see? Again, the same thing here. We got 1, 2, 3. I don't see something significant like this that has happened in this part of this chart. There is potential for a bounce here in this area for me. For me, this could be this is a resistance, support resistance. The first time, and this is the thing, right? The first time the markets get to this kind of these areas that will support resistance. Why I say support resistance? Because it is clearly, sold, buy, bought, sold, bought, final breakout, and the first time probably we're going to good odds that we have something like that. So if I have a trade here, if I got something here, something like this might happen, but now in the opposite direction, right? But it is not because of this, right? It's just market dynamics that I have here, right? So what happens if the market keeps going lower? Am I going to stay here in this trade if I got a trade? Of course it's easy, right? Of course it's easy to talk. All right. It's a very different thing. Triangle down. Red triangle. I guess I am just loading myself with crap here. This is the risk. that I think I get often when I don't find myself doing anything here. Okay, halfback. Look at where halfback is now. I'm just checking here, just killing time here. Do this day looks familiar to you? It looks like yesterday, right? Just the other way around. The also rotation today are higher. Okay. I'm going to close this. I think the same thing happens in Nasdaq. This is misleading. Okay, there's no firecracker potential here, but it has barely have excess in the upper side. Nasdaq. All of the action that we have yesterday in these markets are being rebalanced now. You know, if you got a long position yesterday, if somebody is long, some short-term trading is long, they are really nervous now. Okay, and that's something that can fuel a downside movement here. You know, these longs liquidating their position. Let's see if this market it is clearly now focusing in this low or the gap low here. And 68 has been dealt with. All of the action that yesterday, all that you have seen, we have seen yesterday, that really bad day. But just check a Nasdaq for example, right? Look at this. Look at Nasdaq here. Look at this. Man, come on, man. We can put a trend line here. Look at this. Do you see that? Is this still that has left a very questionable highs here? But markets have to deal with current business first. All right. Boy, look at 59. You got a chance now. This market has the chance. All right, has the chance to take this range, this market out of range. Let's see if we can do it. Look at that. Really, the last second, the last second has taken. Oh boy. Okay. So let's see if this market can trade towards this last resistance here. Gap has been closed. Okay, so taking profits would be down here. This can be a good entry actually here. This market, this kind of markets, man. This happens just so fast. The market comes back up here. This can be a okay. Let's check. Let's see how far it goes up here. Now I have something here. Right. The gap has been closed. Remember the exception. This could be the potential destination now. Here. I want to see this market. This is just barely. This is an aberration here. And this too thick distribution. Well, this is. Oh, remember, okay, I forgot about this. These are accumulations during this overnight here. What is this? 72. Let's see if this market can go further down here. Oh, look at Nasdaq, man. There's a lot of whites here. The thing is, since these two markets are moving in sync here, if this market retraces, it can bring this market with it. The good entry can be up here, maybe back inside here. Remember, these are buys, right? The 77, the market's making a standard. Let's see if they have some downside here. Right, it's coming down here. There could be a spike down here. And this is a potential. This is what I'm watching here. Careful here, right? This one and this one, and which coincides with, people has forgotten what happened here during this overnight. There's a lot of weak inbound longs here that were holding this market. Oh, look at volume. Shit, I just forgot about this thing. We have really nice volume here coming. Okay. $69.90, $67.90. Where are you? Right there. No way. Right here. Right this low, huh? Look at that. You know? And some buying actually comes, some big buying comes up here. Again, I'm not going to trade. I'm not going to die by die statement. Just because I see some buying here, doesn't mean I'm going to buy this market. Okay. I'm wondering if I really want to put some limit orders down here. Okay, that's it. This breakout was a good play here. You know, and look at this thing, right? For example, how things changed. You know? I went from being absolutely, you know, having absolutely no interest in this market, right? And suddenly something changed, right? Just before, okay, when I checked the time was 9:58, 9:59, the market was heading towards this low here, and it was surprisingly, you know, that the 68 actually didn't offer too much resistance. The market just traded through without too much back and forth actually. All right. The first sign of weakness, we have the market opening below the pullback low. One thing, that's one thing. The second sign of weakness, the market getting out of this 2-day range during the first period. This is another sign of weakness. You know, and potentially maybe the market targeting these lows now. I mean, these areas of support. Maybe some zero date 67.58. How much are these 67.50? 67.50. I think it's too late, but see, that's 8 points. My gosh, man, that's. Okay, I wanna see this market coming back and checking this thing out. This is an aberration here. This is, I hate when this kind of things happen here, man. If the market comes down, that's a good opportunity to get into the trade. I'm not going to wait for that to happen. If I see otherwise. Just have seen and this is one thing, right, that happens all the time. When you can see action, you can see the action of a bigger time frame, or the bigger participants, right? You know, who can buy the 1,200 contracts, buy or sell 1,200 contracts at once, for example? I cannot do that. Can you imagine buying that amount or selling that amount? And down here on Nasdaq, and this is the thing, right? That is how these markets are in sync now. Nasdaq and the ES. And I have charted. I have checked a couple of days ago. I was checking Nasdaq. I usually don't check Nasdaq for these things, but I was doing this, and I found some significant area. Potential support resistance around the 25,390, kind of like that, which, you know, as you can see, coincides, right? If this market keeps going lower, both markets, right? Both markets can get or can reach this area, kind of like at the same time. So, what is that important to me? Because if I have a short here, if there is going to be any problems, okay, that can be an area in which, you know, some buying may come. All right, this market is coming back to where I say there's a good area to have a potential entry here. 69.70. How much are these? 69.70, 69, 67, 67.70, 67.70, 67.70, 67.70, or 11. All right. Six, 7, 7. Okay. Now that right there, that questionable low, yesterday's range, lesser low is a good area of to monitor this trade here. That would be very mechanical, okay? Very mechanical. That area is taken, that's an out. Okay, right there has been taken. Let's see. Let's give it a couple ticks. Right. Let's give it a couple ticks, okay? Because that will mean, because this market can come back all the way up here, up here, up here, up here, up here, up here, and still be a market to the downside. The fact that it's coming right from this low tells me who is here doing the sell. Let's see, it comes back down here. Let's say that's all right. Let's see, that one is taken. I don't want this market to come back to half back. You kind of like have a pretty good idea who's doing what, right? There's a lot of short-term trading, but there are got to be very careful here with some reversal here. I have when I am trading to the short side now, right? I just closed the 67.50, and why I closed this one? You know why I closed it? Because this is part today. This is seal date. I don't want to take any risks here. Maybe too close, maybe too soon. That what I'm doing here would be the equivalent of doing some scalping, right? Because I noticed this market has come back to half back. This is the second time it's coming back down here, right? And it is options. Trading options is a very different game than trading futures, right? If I got future here, I would have a stop here, maybe a couple ticks before this low, right? When you trade options, you limit your risk actually. You limit your risk, but also you limit your potential returns as well. I am very aware of this. Check. I'm going to open Nasdaq, okay? Now look at Nasdaq. What happened in Nasdaq? Nasdaq did not took previous day low out during the first period, right? TS did. So these markets are starting to set apart. You know, very subtle though. And look at tremendous amount of whites here. You know, look at the range of this bar, and how thin it is done. Okay, I got another one here. What's that? It's high volume, man. It's 10,000 here. Yeah. Okay. Look at this. Okay. There could be something here. This market is coming. Volume is coming here. Look at it. Oh, okay. These things are working. Okay. I have some alarms here. Volume is coming here. Significant volume. Okay, there's 10,000 here. But I wanna. I don't know if you can watch this, right? But you can see this orange mark here. That I can see if I zoom in here. I will see there's a 10,000 here, right? For example, right? But I will have to be very zoom in. I don't want to do that. When you zoom in too much, you kind of get lost. You kind of lose perspective, right? And you have this support resistance. It doesn't. The thing is, this is the thing, right? If I try to be exact, there's something that I learned from Jim. Is exactness kills here. Don't wait. I'm not going to wait until this market comes down here. I say I wanted to have a limit order down here, right? But no, come on, man. Trade the market that you have in front of you. And look at this. Look at this. Come on, man. I am still testing. I am still testing this. Indicator here. This study here that I built. This is showing accumulation here. Okay, well, all right. Again, I am testing. But can you see how it lags? I have this sign here, accumulation, after we have noticed here, buying coming up here, or contracts potentially being to the upside. Buys come here, buys come here, buys come here. Right? Where this appears, where this label appears, way down here. Right? So it's lagging like 30 minutes. So if I'm going to wait for that, assuming that this works, right, I will be too late now already. Look at that. Look at that, man. Don't you love trading? This is fascinating, man. This is really good. This is a really nice learning day here. You can learn a lot today. As you can see, I don't trade based on numbers. Something that catch my attention, this is low volume here in Nasdaq. Now, this high actually is a better high. Let's see if this market makes an attempt now to reach that to reach this September high here, this reference here, because this is why I have these marks here. Well, you can see these blue ones here come from. I'm going to show you where I got those ones from. Those ones come from. Oh, what the heck happened here? Okay, those ones come from this day here. From this day. And why I just don't do any any overnight session. I don't mark any or all of them. But when I see something here, what I said here yesterday was, the overnight doesn't repair this, right? Doesn't test. I consider this one being tested, really, unless this happened during the regular trading hours, which can be now. Now, this ellipse here, these blue ones, are accumulation of stops here, right? You got 1, 2, 3, 4 in this area. Now, down below, we have this one. This is prominent overnight POC as well. Okay. And another one down here. And the overnight low, this one comes from this. I would consider this today low actually adding to this. And why I have this? Because this is this is significant volume here. 350,000 here. Is not that kind of like the standard for the overnight. Usually the overnight has 150,000, for example. Now this big one here, big ass range for this overnight has 350, right? Pretty much the same that we have down here. And when the market the following day rebalancing some of this, and something from this day, really particular for this day is this part here. Let me show you. And this is context, right? This part here, right, is very different than this one here. Because this the amount of inventory that was here was way below 90,000. Okay, the chunk, more than 67% of the volume of this session, of this overnight session, of this range, all you can see here, came down here all the time. Was down here. And what happened is, if there is something here of significance to the upside, the market just will not take care of this inventory only, but also we have some advance back into this range, and it didn't happen. Right? Showing that this day was probably just short covering or rebalancing of the extremely short inventory, from this overnight, which could have shown the direction the market wants to go, but it just got too short too fast. Some rebalancing happens. Well, again, it has potential to go to the other side. It did not complete. It didn't get back into this value area range, and what we are seeing now is the market getting out of balance, right? Getting out of balance again, out of this 2-day balance. And just like that, 6,800 again. And once again, this market can go all the way back up here. Now, we have checked 68. It can take this one too. It can take this one too. Right? And still be a day to the downside as long as this high is not taken. Just look at this. Look at where this volume is, right? Or these big blocks, where these big blocks came. Up here, or down here. Well, up here when the market was down here. I was doing Trader EFI, which is let me show you what that is. Right, I don't know. It has the account number there. Oh, show that thing. Let me see. This is This is strategy 5 or trado bait. Right. Something that I've noticed here, right, is I cannot use my strategy, the way how I trade. I got rhythmic here. These are my. This is what I have my. This is my dome, right? And this is from this is the board from where I pull the options. I got today's, tomorrow, Monday, and so on, right? I need to adapt. Okay, I need to adapt to strategy 5, and it's meaning that I need to change strategies, because what happened in that what's that prop firm? In that prop firm is that if you, for example, have an advance, you have a position and make 10 handles or 2 handles, but the movement actually had 10 handles to the upside, and once you have your movement to the upside, you move your stop to break even. If the market comes back and takes your stop, the platform or the system takes that unrealized gains, even though you have not lost, the system processes those trades as a losses. So, what the system does actually is force you to take profits, even though you might see potential in the movement, and it basically kind of like a stream of push traders to be like scalpers, right? And that's something I don't agree or I don't like, but that's how it is, right? That's how it is. You have to be. That's what I realize about those platforms. It can be good, for example, to try or to. I mean, you don't need actually a trading platform to test, to paper trade, right? If you need a paper trade, you just look at the market and write. You can use an Excel sheet, worksheet, spreadsheet, or you can even use a paper, right? Okay. You write down why you go long, short, and why, what make you take that position, what's your risk, what is your assessment, what is the context, where you are going to take profits, how are you going to take losses. All right? That is paper trading. You don't have to use a platform, really. No, we don't have to use a platform. Now the thing about candlestick charts is, just take a look, for example, right? You don't see this. How can I make? Let me see. Let me show you. Okay, let's duplicate this chart. Okay, chart settings, duplicate. I'm going to duplicate this one, and now I have it here, analysis, studies. Let's clean the chart, clean chart. Apply. Apply. Wow, doesn't. Okay, let's remove this. Remove. Apply. Okay, look at that. For example, huh? Look at this candlestick charts. What is the difference, man? Can you see the significant difference between this chart and this one here? You know, the tremendous disadvantage that we are having just this kind of charts. We don't see actually the inner workings of markets. Now this market is to the downside. Okay, let me see. Well, I do something. I may do something here. I don't like this tremendous volume coming down here and actually drying when it tries to go high. Seems this market wants to go lower, man. The market wants to go lower. Okay, the immediate short-term support would be the 80s here.
Order filled.
Okay. Immediate. Oh. It's not having it.
Order filled.
Okay. This area here. Right out here. Oh, this market is working its way through. Might work, actually. Oh boy. That doesn't look good for the buyers here. Okay. Alright, it needs to go through this. Maybe targeting the 66, 68. Traders are selling rallies here. Okay, this area has been taken. I need to see some value, some volume coming down here now.
Stop filled.
Uh-oh. And look at this, man. This accumulation keeps buying, keeps coming here. This is weird. You know, the bigger time frame is buying into weakness here. More and more I am leaning towards this being a potential support here. Let's see what can be here a really short-term trade. Maybe 80 or the 90s. Okay, 90s. Okay, I got 90s here. Okay, reaching this September high can coincide with the Nasdaq closing the gap. So still there are plenty of reasons for this market to keep going lower. Still more, a little bit more here. Man, this is really good, man. This is really good. A day that had nothing on it actually turned out to be pretty good here. Can you believe that? You know, this aberration remains here. Look at what C has done. C has reinstated this thing here for Nasdaq at least. I would consider this history. This one history as well. Still maybe targeting this low here. Significant accumulation here happening, man. Really high volume, really high volume. So volume is actually backing the movement. This is key here. The level at which this market is right now is very important. Oh, look at this, who dries, how much, no, only 9 minutes. Okay. The differential here has been, the bid has been higher than the ask. All right. I'm going to put a bid a limit order of 56 with 2 ticks stop down there. This one 2 ticks stop here. Oh. This can, the reason we mentioned the place against that trade is this low here. Okay, if that area is taken, the next one could be the 67.15 actually. There's a potential destination for that movement. The market really didn't care about this previous support resistance here. It seems like it's paying more attention. It's dealing with the gap first. Now the gap in Nasdaq. I am interested now in seeing where is the next accumulation of volume we have in the lower side. And what we have here is actually all the way down to the 40s, which is actually not that far, man. If this market can take out maybe the 36 or 28 can be. Okay, I am thinking, I am second guessing myself about that limit entry that I have there, the 56. But my stop is only 2 ticks there. What I see here is an unfinished action to the downside. If you have any questions or comments, just please let me know. Okay. Watch out. There is something here. We have an announcement at 11. President Trump is doing something there. Huh. Wait. I don't like that. I do not. What the heck is that, man? Be aware of this. These markets are trading on news. Holy shit, man! And the president, when president comes, I mean, it can be really bad or really good. Be aware of that. So this is potential volatility. Where this one's coming from, man? No freaking way. It is not one tick to fill in my position. Oh god, 3 ticks for filling my position. God damn it. Ooh, yeah. Exactness kills, man. Okay, look at this. October job cuts in October hit highest level in over 20 years. This is what happened here. This comes at 8:30. I think that's the reaction to that news. What we saw here. What we are seeing here right now. Now that this market has not filled my position here, right? The second time it comes, it actually may go through, fill and keep going lower. It's tremendous accumulation here, man. $48. Seems like, okay, let's see. It's getting there. You see, the second time has come, right? The more times it comes to a reference, the more likely it is that when it's tested again, it's going to go through. Now, the fact that the reference is being tested so many times, right, also is evidence that that reference is in fact being rejected. That position is sitting there, man, not being filled. Now by one tick. Gosh. Remember 11. Oh, I was looking for here. I was looking for news. Gosh. We never know what he's going to announce, man. That's the thing, right? Maybe they're announcing some big news on China or more tariffs or whatever the fuck it was. It's dangerous now. It can be very dangerous. That's a very critical level where this market is at now. This position is sitting there, man, just wasn't filled by one tick.
Callum Burton, Callum Doyle, the only alteration in the whole squad, back from suspension. Ryan Hardy, George Thomason, George Dobson, Sam Smith, Ryan Barnett, Nathan Broadhead and Ryan Longman will go through the Portsmouth side. When we get an opportunity as Wrexham get us underway, easy header away for Poole, Welsh international centre-back for Portsmouth. They get a free kick in the centre circle. Now as
Watching Wrexham here.
side of the box, drills in a shot, good save by Okonkwo. He had it covered comfortably, but his hand
How
was
long?
sharp
This is
enough
7
to
minutes.
cover that. And
I'm going to watch some football here.
having had their manager John
I hope they
Mousinho
don't ban this.
on their backs, they're reacting.
I don't have a strike in this YouTube for re. Okay, so I don't want to have that. Let's move this out of the way.
So far this season.
As Sheaf drives forwards well. Windasson space on left. Sheaf 25 yards out. Feeds a clever pass. Kakashi lays her off. O'Brien. Good save by Bursic. Lovely snappy combination play. And Bursic had to be quick getting down low to his right. There's a defender in his view. Push her behind for the corner.
Yeah, really nice play by Wrexham though. It's worked really well. Ben Sheaf just has so much grass in front of him to run onto.
Okay, all right. Let me talk about something that I've just noticed here. What the heck is this? Oh no, this support is being probably maybe the next thing down below we have the 50s, which is the 20, 67, 20. Is that the adjusted? Is it? 20, 15, yeah, the 20. The 20 is one thing. 6, 7, 20, that's about 30 points below. It seems like this market is waiting for something here. Don't like the way how this is happening, man. The 20, what do we have at 20? That's the moving average, right? Line 20 here. This is the 50 SMA, 50 SMA here. That can be what the market is aiming to.
nice ball into Kakache. Just a little layoff. Lewis O'Brien just thinking, hit the target. Can you cause him problems? Does that, but it's a decent save.
Like I said, defending set pieces. It's a short one.
So we know now that volatility. Oh, something I want to say. The one thing I want to say, I don't like. Just not that I don't like. This is very obvious here. Now we got accumulation here at the low of this profile. If there is no downside continuation from this,
Order filled. Stop filled.
and just like that, I was stopped out. All right. Market just took this one, grab my stop, and then it's coming back. But I'm not willing to risk anything here, man. Really. Now, look at that, man. It just come feel me, took my stop, and and now is there's some volatility. I mean, what I'm saying is that these shorts here, if they don't have downside extension, well, seriously a risk here of this of being squeezed. Especially, I have no idea what is this about. Well, just so you know, but it's something that I have, this is something scheduled, but for to happen in the next 3 minutes, for example, right? There's a lot of accumulation here. Now they're having a heavy, especially after this big buying that was happening up here. There can be something. These guys are a risk, and this is a go no go label for me right now. This is a go no go label for me at this moment. Let me see if I can do something here. Actually, maybe some end of the day, really far out of the money. Let me see something I can risk here. I don't want to risk really that much, right? Maybe 1 point I can risk here. 68.45, and the other one is, let's check that out, 68.45, and the other one would be 66.45. No, that's too much. 66.45. That's 100 points. That's too much. Oh, these guys are getting very. No, I don't like this. Really don't like what's happening. Oh, I will take a quick break here. These kind of things can throw a wrench in what we do. The day can have some things, and just out of nowhere things may come, really. Right? And when change happens, man. Got to be ready to adapt. Nasdaq has not closed its gap yet. This is the gap. Nasdaq is, this low is very questionable, very elongated now. look at what we have here. Whites, more whites coming here. The pace of this day is terrible. Terrible day here. Really bad, man. Come on. If you didn't have anything up here, it's going to be, and you're thinking, like, man, should I go short now? Should I do this? Should I do that? I better go now. The risk is higher for me now. There's probably some odds of to the upside for me at these levels, because this is a go no go level, man. And the announcement, I don't know if President is going to have a press conference, or it's just going to be a tweet. Who knows? Look at the accumulation. Look at the accumulation at the low. Look at the volume that's coming. What I'm watching is not the volume itself, but where it's happening and how it's happening. Now, in the past, this kind of activity was sign that the movement was close to its end. And we have seen that happening over and over in the past 2 years, right? And the market just comes back, picks everything back and up to make new highs every single time. Traders are used to do that now. Are used to that. In this I'm flat, just in case. You wonder. Look at how this action dries up here, right at the support resistance, and dries down here, right at September high. It's not an easy situation for me. The context is especially now that this volume accumulated, it looks very risky to me. Probably if I still had that short, this would be a good time to close. No. The option that was trading this is still positive relative to that price, but it hasn't had more advance. Because it has almost reached the strike, but it hasn't, because it's 0 day. And the reason why it closed, it was 0 day. Maybe it was tomorrow's or Monday next week would have been different. But I didn't want to risk that much. That was 4 or 5 or 6, I believe, versus 15, 25 points risk. You can see the difference there. I don't know, man. I don't know if you were watching to the downside, but I am neutral here right now. All right, unless you have any questions or comments or want to ask anything, I'm going to call it a day here. I wish you have, guys, I wish you have a wonderful rest of the day. Stay safe. I just opened the chat, didn't see anything there. I don't know if there was something there. Okay, hope I can see you another day. Bye bye.